we're going to be talking about market trends. So if we look at this close up, you can see there is an overarching trend, which here is called the primary trend, the black line that you can see that's going through the entire thing. This is basically the overarching trend, the long-term trend, the trend that you should be paying attention to if you're going to be trading on higher time frames. Then there are short-term trends. So as you can see, that's the pink line. These are tiny trends that are happening maybe on the minute time frame. And then we have the intermediate trend, which is the gray line. That is probably one that you're going to, that is probably the trend that you should be trading on maybe a higher time frame, maybe a 10-minute, a 15-minute, a 30-minute, possibly even. And then when you get into higher time frames, the 4-hour and such, then you're going to be trading on that bigger time frame. Let me read this card. Let's read the card and see what it says. It says it's important for all participants. So for marketing trends, here's what it says. We have the short-term trend, the intermediate trend, and the primary trend. It's important for all participants to possess a solid understanding of these three trends. Primary trends typically go on for 1 to 3 years and occasionally even longer, showing how investors perceive the business cycle. So that's that big trend that we're looking at. Intermediate trends, which last around 6 weeks to several months, aren't the main force behind the market, but it's vital to recognize them correctly. And like I said, if you're trading on a shorter time frame, which as day traders you are, these are the ones you're going to want to look at. And then the short-term trends spanning 2 to 4 weeks are often random and a bit unpredictable. I feel that.